Oh, hello everyone. It's Susie again from Esoteric Trading Solutions. I apologise if the audio is not very clear or the presentations could be better, but I am pretty busy and I really just want to focus on the content of what I'm doing so people actually learn something and don't lose any money. So just going forward, I'm actually talking about the crypto issuance and how to analyse it. There's a lot of analysts out there that will analyse ICOs. And from what I've seen, they're all so simplified and they're not really outlining the risks to the buyers at all. So it really, really bothers me because honestly, you're actually buying into a startup company and the risks for a startup are huge, and often the banks won't even fund a startup. So the fact that the ICO market can actually get funding quite easily for a startup absolutely astounds me. So the first question really you've got to really ask yourself is, why are they coming through the crypto market anyway, when they could go to obviously the debt market or the equity market to get their funding? That's the first thing. And obviously with those two markets, they are regulated. Yes, we'll say yes, the processing capability and the technology is decentralized. But often, what I've seen with a lot of these ICOs have come out now, there's now, well over 1,200 of them that are already being traded on the market. And if you look at the ICOs now and what's coming out in the future, just so many more, you've got to question yourself, why are they, hitting the crypto market, particularly when some of the business, the business stories or the business models just don't make sense to me, and the lack of utility. So I guess the first thing I'd like to say is buyer beware. Some people are in this market for a quick stag, a quick profit. That's fair enough. Others might be in this market for, a longer term view. And I guess with that, the longer term view, you've got to make sure that you're happy with your analysis. Sorry if I've got typos in this presentation. I don't often look at typos either. But pretty much I just want to focus on what I'm talking about and the content so people can learn something. And so, if you're holding something for the longer term, you want to make sure that you're being compensated for that risk and that you're happy, with the business model and obviously with the ICO itself. So, as I said, there are analysts out there that I think just focus on, it's just way too simplistic what they're looking at, and I think that can be quite dangerous. Again, they're not outlining the risk to the buyer, and, and again, buyer beware. A lot of these ICOs, you're effectively crowdfunding. You're basically crowdfunding blockchain. You're enable platform where there's no prototype. So in other words, the ICO hasn't even, the business hasn't even started yet. You're effectively funding the business from zero. They're using Ethereum, technology, and they're basically, adding a token to it over and above Ethereum's technology. So big deal. So what? And essentially, they're getting funding through that from obviously the buyers to just set up a business. So you're actually taking on startup risk. And I will say with startup risk, it's hard enough trying to value an equity that goes on the market or a bond deal, but never alone trying to value startup risk. So the biggest problem here is a buyer or a trader or whatever, or an investor can actually pay too much for the coin in the first place, because it's really hard to value startup risk and what is the true value of that coin. Again, with the ICO market, as you all know, there's no regulation. Again, someone can just walk away. The issuer can walk away with all the money, and there is no regulation at all. People are, often, from what I can see, people are negative Ripple, which just outstands me. Because Ripple is already in existence, it's already working, it's already making money. They've got $15 billion in the bank, they've already got real clients, it's not a prototype, but they've got their individual own technology. And yet all these other ICOs that are going off and going higher, they're reliant on Ethereum technology, with just a little change at the top, so that they can produce a token of some sort. And it doesn't make sense to me at all, to be honest with you. Ripple's already in existence. It's making money. It's got $15 billion in the bank. They've got well over 100 clients, institutional clients, and yet people are chasing these retail ICOs where, the documentation, the white paper is just terrible, shocking. There's hardly any facts or figures or anything. There's no prototype, and often, these white papers are not audited. Well, they're not audited, essentially, or there may not be a white paper. And the assumptions in these white papers are just, look, honestly, pie in the sky stuff. Seriously, there's no fact or validation for the assumptions in the business model. So honestly, I'm amazed that some of these ICOs actually get money, to be honest. Look, I look at a lot of criteria when I'm assessing an ICO, and as a minimum, I've got an extensive list. It's probably nearly 100 criteria that I look at. But honestly, as I said, there's a huge risk in ICOs. There's scams. The white papers, as I said, are not audited. So the issuer can effectively, basically promise anything to get you as a trader or an investor to actually fund or buy these coins. You don't have any protection at all, unlike debt and equity, where there is protection. The issuer has to issue a full-on prospectus, and everything needs to be validated. Now, if it isn't, they get in trouble by the regulatory authorities, and they have to update the market constantly. So, as an ICO, you don't have any of that protection at all, and they're still, asking for your money. And I know, the business models are saying they need, blockchain technology, but honestly, some of the business models, they don't make sense. They're not apt to blockchain technology. It's almost like they're trying to fit a business to the blockchain technology so they can actually get funded via the ICO market. The first question I ask also is, do they really need to come to the ICO market? Could they go to the debt market, or could they go to the equity market? And I suspect most of the time they come to the ICO market because it's easier to get money out of people, because you don't have the protection, you don't have the prospectuses, all this sort of thing that you have to file with the regulatory authorities like the SEC over in America, and like, APRA here and ASIC. But it's much easier for them to get money out of the ICO market because there's literally no requirement for them to provide you as the buyer anything, which, it's just unbelievable. I don't part with my money unless I'm really sure about something, seriously. And again, the price mechanism, they can basically put a price out there and no one really knows. Honestly, not even the professionals know how to value, some of this startup risk. It's very, very difficult to value startup risk. If you look at some of the white papers out there, the expectations are high, they're not realistic, there's no transparency, there's no validity in what they're saying. It's just absolute bunkum. In other words, it's absolute crap. The first thing I look at, particularly even if you're looking at a token or a currency, is what technology they're using. And the reality is they're using Ethereum. They're just copying Ethereum's technology. And they're using a particular protocol on top of the blockchain and using Ethereum's technology, which is just a standard template, okay, to create, their own platform. There's no competitive advantage in this like Ripple. Ripple's got total competitive advantage because it's its own technology. So, your mind's got to go, hey, they've got a business model here, they're using Ethereum, great, but that's not a competitive advantage, full stop, number one, because Ripple can actually take over Ethereum, particularly from a transactional point of view and how many things they can process and what they can do. The technology is actually better. Number two, again, if it's a coin, and again, as I said, in the token business, it's really easy to issue a token. With a coin, the question is whether this coin will become a currency. Now, Ripple's coin has already become a currency. It has its own separate technology and blockchain, but it already is a currency. So there is serious value to that coin. The coin should be a lot higher than where it is. The banks are actually using that currency already. Now, with other coins, effectively, who uses those coins as a currency? That's the question you also got to ask yourself. If they're not used as a currency, then there's really no value to that coin as such. Tokens, as I said, operate, on Ethereum technology. And, again, what's the processing capability? What's the utility? If the technology can be copied, which obviously it can be, then that's not a competitive advantage in itself. Also, the utility of the token, what's the business case? What is it? What is the utility? What is it? Is there real utility or not? The business case, is it something that's needed in society? Because if it's just an add-on, just an afterthought to get the ICO funding, well, then it's not realistic at all. What I do find is most analysts, when assessing an ICO, and sorry I'm talking very fast, but I've got a lot to get through. Most analysts, when assessing an ICO, only tend to look at the following criteria, which in my mind is not enough. Technology team, white paper, not pros and cons, and size of issue. In my mind, there's just so many other things to look at, and this is just way too simple. You should be looking at whether the project is going to fail. Is there, obviously with startup risk, most companies fail. 80% of companies in the real world actually fail. Will this project ever get off the ground? The business projections often are way too simple, and the white paper there is one, and the revenue projections. Where is the revenue going to come from? You know what I'm saying? Like, honestly, revenue is based on clients. So, if the revenue is going to go up and they reckon the clients are going to move over, how are they going to get those clients physically? Do they go out? Do they have salespeople? Do they have distribution people? Do they have people knocking on people's doors? Do they have brokers to try and find these clients? Sometimes clients don't want to move. There is a barrier to entry. Do they advertise much cheaper costs, whatever? But the thing is, you've got to get a client to shift and to swift and to move over. Now, it's hard to get clients to shift because people are busy, people are lazy, whatever. It's very hard to get clients to shift. Now, I've seen in some of these cases for ICOs that they, assume that they're going to have 10, 20% new clients, in a year. I mean, that's absolute bunkum. In other words, absolute crap. Sorry, bunkum is an Australian word. Because, look, I've worked on the sales side. Often it's very hard to get, 5% of clients to move from a known market, i.e. the telecom market. People are in their mobile phone business and they've got, contracts, or they like the mobile phone they've got, and they like who they're dealing with, whether it be telecom or whether it be Vodafone or whatever. So often people don't have the time and they don't want to shift regardless of the perks, regardless of whether something's cheaper or not. Again, another thing you've got to ask yourself is, does the technology suit the business? For example, Bitcoin does not suit the banking business. The banking business needs technology for immediate settlement, real-time gross settlement, which means instant settlement. Bitcoin does not do that. Bitcoin goes up because people know about Bitcoin, and it goes up because, yes, there's a lack of supply. It's only 21 million, supply. But the reality is, Bitcoin is old technology, and the question is, should it be there? I mean, the price of Bitcoin, I don't believe it should be there. It's only going up because people know it, and that's the first coin they know. And, and there's a lack of supply, pretty much. But the technology is old technology, and, when you compare it to Ripple, it's crap, absolute crap. Also, in some of these ICOs, sometimes it seems way too complicated. And the reality is, if it's too complicated, like I said, in the debt markets and equity markets, we used to just stay away from it. If the structure or something is too complicated in terms of how the investor, how the buyer is getting compensated, stay away, because complication makes it even harder for you to be remunerated as such. It's just way too complicated. So, there's a lot of scams out there, as you know. Again, look at the business climate, look at the economic climate, geographic, regulatory, political, whatever. Are there realistic, assumptions within their models, their business models, and particularly in terms of revenue? Without revenue, a business doesn't float. It doesn't go on. There's no longevity. I suspect that a lot of these coins and tokens that have been issued, well over 1,200, a lot of them will not be there for the future, in 5 years' time or whatever. Is the project viable? Do they have a competitive edge? Will clients move? Why will clients go with them and not someone else? Is there real utility required, or is it just made up demand that we need this in our lives? Because honestly, I suspect a lot of these ICOs, we actually don't need the product. At a minimum, you should look at, now, as I said, I have nearly over 100 criteria that I look at, but as a minimum, you should look at the strength of the program, weaknesses, opportunities, threats, team, why not other forms of funding? That's a red light for me. Why didn't they go through the normal forms of funding if the technology doesn't suit the business? Longevity, is it someone else's technology? Is the utility real? How do they get the clients to produce the revenue? Number one, how do they do that? Like with Ripple, you've got them, going around meeting banks, having conferences, knocking on their doors, showing them the technology, talking to their IT people. How does the ICO get the revenue? How do they get the clients? Internal, external factors, structure, legal risk, custody, political risk. Where does the money sit? Does it sit in custodian? So there's some protection for you guys. Does it, the issuance, whatever, growth of the market. Are they in a market that's completely saturated, that the competition is so severe they are not going to get one client? Again, there's just so much to look at when you're assessing an ICO. Often, the assessments are just too basic. So look, I'll leave it at that. I will touch this again because there is a lot to cover with an ICO, but I hope this helps. Cheers.